Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone is doing great. Long weekend, lots of playoff football, all good stuff. All right, unless you're a Vikings fan, Bucks fan, who else lost? Ravens, but yeah, overall good weekend of football. Hope everyone got some time away from the screens, and we are going to kick off yet another fun-filled week of trading. Let's go take a look at the calendar before we get to the questions and to the charts. Taking a look, getting out of that Monday bank holiday. Got a lot of data coming out of Canada. I'm not as concerned about Canadian data, although it is inflation data, so it might be worth taking a look at any reaction at 8:30. But for the most part, we saw just a range established this morning in the U.S. markets, and Canadian CPI didn't seem to do much. Remember, Bank of Canada has had a pretty good effect on what's happened in the U.S. markets. We do have FOMC member Williams speaking. Used to be a much more impactful speaker, but still one to watch. And then we go into Wednesday. Is there anything that the equity markets would be looking ahead to at a concern or just kind of a wait and see mode when it comes to Wednesday? PPI is not necessarily as important as CPI, but these are still going to be impactful data releases. I think core retail sales is a really good puzzle piece to the University of Michigan consumer sentiment. So we'll see what the consumer's up to. So tomorrow's data is pretty significant, worth watching. Beige Book gets sort of blown over at 2 p.m. on Wednesday, but I would keep an eye on that one as well. FOMC member Harker is speaking. Then Logan's, we have some FOMC speak tomorrow. And therefore, we have a pretty busy week when it comes to what we're dealing with. ECB Lagarde, if you've got a dollar position, if you've got a euro position, it is going to be in play early morning on Thursday, right? So lots to keep an eye on. Remember, we're also going to be pushing out crude oil inventories into Thursday because of the Monday bank holiday. So Thursday we'll have both the natty gas storage numbers and crude oil inventories. And those are our hot zones for the most part this week. So that frees us up to start taking a look at what we're dealing with on the charts. What are we inheriting this morning? Nothing too dramatic. I mean, we've got a range in place. We've got some highs from November that the Dow is reaching up towards and logically exhausting at. When it comes to the S&P, we are putting in a series of lower highs. We have been since November, but we've also put in a series of higher lows. So, it's six of one, half dozen the other. What is this? This is the market getting quite literally squeezed by the series of higher lows and a series of lower highs. And the winner is the one that takes it across the line through that white, that's an anchored VWAP. That's going to be how I measure who wins. This is a battle happening. Again, lower highs, higher lows, that compression. At some point, we're going to see price action break one of those levels. Let's not presume we know which way it's going to break. However, I would not bet against the bulls, especially as from a macroeconomic standpoint, we're starting to see a little bit of that wind down of what? The rate hikes. And now we're talking about how soon do we see that first quarter point cut. Every hot zone that we've talked about on the economic calendar, that's one more piece of information that gets factored into that target rate probability. And that target rate probability maps out the path to where rates peak and when they start to be cut. And by the way, gang, that's the only reason we're looking at the data. What is the Federal Reserve going to do? All right, with that being said, let's go ahead and jump into the questions. As always, this show is about your questions. Let's jump on into, let's see, first up, Furman, good morning. When day trading, if the market, S&P, NASDAQ, Dow, is below yesterday's close, am I allowed to take a long if the structure is neutral or double green? So if we're below that line in the sand, right, there's a smidge of bearishness that I have, or at very least, I'm considering that previous session close as resistance. But the simple answer is yes, I am allowed to take a long. Just remember that resistance, meaning the previous session close, that is going to be a level to watch. It is going to be resistance. All right. So that's something to keep in mind. All right. Thanks for the question. Hey there, Mr. Walker. Question on Brazil, Activision, and Honeywell. I have not been trading Brazil. No, that is not something the EWZ. This is the MSCI shares of Brazil. Way too gappy, not a lot of great structure. Yes, we could definitely say this is the last. We haven't seen an overbought Brazil since October 21, and then before that, October 10. So we could look at this as an overbought market within the context of a neutral market, with the preceding trend having been down. It would be a short, especially on this gap close from December 9. So if anything, that's it. But I've been steering clear of that quite gappy chart. Next up, Activision. Activision is an uptrend. So this is by the dip. This is a definite buy the dip. And then lastly, Honeywell. Honeywell this is going to be one of those markets where I either buy over sold or short over bought. I'd rather focus on the long side since most of the candles are green, since the trend that preceded the neutral was green. So if I were to contrast EWZ and Honeywell, the reason why the history, not just the current market structure on the hard right edge of the chart, the history of the history of the structure is so important, because we can see what the trend that preceded the chop was. So in the case of EWZ, I'm bearish. In the case of Honeywell, even though it's chopped now, I'd be a little bit more bullish. All right. So thanks for the questions on those symbols. All right. Next up, David, good morning. Can I please comment on a short MELI neutral multi-trend, oversold slow stow, and Darvis resistance? Well, I haven't overbought slow stow on MELI, right? But I think I know what you mean. So overbought. I like that we're coming up into Darvis. You can see that we had peaked back on the in August 15. So back in the middle of August, we peaked. There's that nice automated, based on previous market decisions, these swing highs and swing lows. There's our Darvis, right? The pattern that we're looking for. I'd look for that pattern again on MELI before I even think about going short, especially with the way in which it surged higher. One of the other things to remember about stocks right now, gang, is before we even, and I've made this mistake a couple of times, getting too ahead of myself and forgetting that we're into earnings season again, which just bugs. I don't like earnings season. It just gets in the way of clarity. So keep an eye on where those hot zones, those earning hot zones are, and we'll take it from there. So yes, but let's wait for that pattern up near that resistance level. And again, when it comes to chart patterns, right? I like patterns where they're much more objective. There's highs, there's lows, there's closes, rather than the formation of price, which can be incredibly subjective, right? It could be, there's a lot of interpretation. Interpretation is just code word for room for error, right? So I like using patterns that are very easy to find because of the open, high, low, close pattern. In other words, I'm looking at price. So when I look at a pattern and I talk about MELI, we're going to be looking for a minor low or a minor high, in this case, a minor high. My favorite patterns are these minor high, minor low patterns. You could even call the Darvis box itself a formation, a pattern, and then the 1, 2, 3s. Those are the three that move the needle for me. And they're automated. There's no subjectivity to why they're there, right? So that's what I look at that one, David. All right, next up, gold is gold extended enough? Let's take a peek. is gold extended enough to short or has more to go? I don't want to short gold. Yeah, I can't. Not even do I want to. I cannot. And the reason I cannot is because of the structure. Take a look. Where are my drawing tools here? Take a look at the structure. And this is so important. Gang, when that lower row, this is our multi. For those of you saying, Rog, okay, you use this multi thing a lot. Yes, gang, that's part of the tops system, right? And the multi is structure, right? That multi is all about structure. And so structure before all else, structure before all else. So we're going to be talking a lot about this on February 15th. So mark that on your calendar. It's a month from now. And structure is so important. Why? I cannot short that. Look how important it is for me to have structure, because then it allows me to say what I can and what I can't do. And remember, the process of trading is whittling things down until you get one, maybe two strategies, one or two actions that you can take. Most traders, especially in the early stages of their trading, do this, right? They start with one idea, and by the time they're done looking at all the indicators and this and that and the other thing, they've got more ideas than when they started. That's not effective trading. Effective trading should be filtering out, not allowing in. In that regard, I cannot short. So would I say it has more room to go? Yes, I would wait for a pullback and get long again. And one of the things that we've been talking about, we'll talk about this on the 15th as well, and that is if I can't get a reversion to my mean, which is the wave, what else can I look at? Let's say I don't get a pullback to the 34 EMA wave. What do I do then? Take a look at this daily price movement range and how effectively it has been that reason to get long. So we'll look at the DPMR, daily price movement range, using a session by session historical volatility approach that gives us an idea of what typical price movement is for a specific symbol. All right, thanks for the question. Good morning. Can I give you some advice to trade futures? I'll just started trade futures. Thank you. First bit of advice trading futures, they're highly leveraged. Have a really solid risk management plan that you trust and you will use. My first advice, and this is for any kind of trading, but most definitely for any kind of very leveraged product like futures, like Forex, start with risk management, which is to say, what time frame, how much am I going to risk, how many contracts can I buy? That's the first step. Otherwise, futures will gut your account mercilessly. The other thing I would say, find those micro contracts that will allow you to take a small step with less initial margin requirement, less dollars per point, right? Because it's a smaller contract, and start there. And that's going to be the most important thing when it comes to futures. Anything that leveraged, Forex futures, risk management, and then starting with those smaller contract sizes. All right, next up, any thoughts on Occidental or Chevron for a long play? All right, Chris, Occidental, no, not where it is. And actually, I would not be thinking long on the daily at the moment. Now, a lot of folks say, Rog, but what about another time frame? All right, so let's use the session by session, that daily price movement range, a DPMR, and ask ourselves, what's the structure on the 1 hour chart? What's the structure on the 4 hour chart? And then I can start asking myself, all right, the next time we get down to one of these levels, I can think about a buy, right? I can think about a buy. What about the 1 hour? Does the structure on the 1 hour change the complexion? Absolutely. Can I think about a buy off the daily price movement range if the 1 hour were to reach the zone? Absolutely. So even though I'm pulling up the daily, I can throw that DPMR on a 4 hour and a 1 hour and still get some actionable levels that would be better for that shorter time frame compared to the daily, but longer in terms of an intraday time frame that would allow me to hold a position for a couple of days, right? Not just a day trade where I'm flat at the end of the day, but rather being able to hold for a couple of days. Let's take a look at Chevron. Chevron is still neutral as far as a long, not yet. What I would say with Chevron, The pattern you're looking for, Chris, is there's your chart pattern right there. That's the pattern you're looking for. Where are you looking for that pattern to happen? Darvis, neutral, oversold, stochastic, right? So you're looking for something like that. These are patterns you can you can memorize, right? These are patterns that I've been using and teaching for 20 plus years. It just works, but everything relies on the market structure. So I hope that makes sense. But you're looking for something like that. You're looking for something like what we saw in mid-December. Chris, again, preferably along that Darvis at that 167 level. All right. Okay, next up is, hey there, Trader Momo. Oh yeah, Mr. Walker, my pleasure. Absolutely, my pleasure. Trader Momo, I've heard since the start of 2023, several economic analysts say that 5% won't be enough. They are saying 7 to 8% is what the Fed needs to hike rates to. Bait and switch by Powell in May. Trader Momo, and I love the question because a lot of folks are getting this. Now, this is the answer, and it's by no means any reflection other than the analysts and prediction. I don't care what economic analysts are saying. I only care what people who have skin in the game are saying. So I could care less. An economist has never made anybody any money but for themselves. Let's be real, right? And number two is what we do as traders is we react, right? We were talking about football earlier. What does a great player do? A defense could set up. Let's say they set up in a nickel. They go old school, right? They could set up however they set up, but they're responding to what's happening with the ball. They're responding to the quarterback, right? They're making adjustments right in the middle of the play. That's kind of what we need to do, right? We have a play in mind. Maybe there's something we want to do. Maybe we're going to rush the quarterback. I don't know. But if the quarterback's smart, they see the rush or see the formation, they're going to do what? Maybe they'll play a screen, right? They'll use that to their advantage. My point is, right? My point is, with the rudimentary football aside, is let's see how the play evolves. Let's see where the pieces are, right? Rather than predicting where the pieces are going to be, let's see where the pieces are. And then we have the latitude as traders to have short, medium, long, really long time intervals. The more confident I am about the macroeconomic situation, it's easier to have a 6-month, 1 year, 3 year time horizon. When I'm uncertain, when we are uncertain, let's truncate that and say, look, I'm not going to try to have a trade on more than maybe today or a handful of days, really, which is where I am right now, which is why we've got tools that will allow us to say, Rob, let's be in the trade for today, maybe the next 1, 2, 3 days. And that's what's been working since June, as we really don't know what's this recession going to bring. Where's the Federal Reserve going to go in terms of rates? But you see that the problem is we start predicting, right? Rather than reacting. We are counterpunchers, gang. Traders are counterpunchers. And that's where we have to remember, let the market do what it's going to do. We take all that in and then we make a decision. So anything that's going to lead into my predicting, it's never going to take me where I want to go. Gang, where do I want to go? What does Mr. Wonderful say? Money, cash flow. That's what I'm into. I'm not into, and I'm going to tell you, a lot of folks are really into this. They want to tell you what's going to happen, right? And then they want to be able to say, just like I said, I told you so. I never got a dime. Can you believe this, gang? I've never been paid for an I told you so. My account balance never goes up for an I told you so. Only decisions, right? Only decisions. So that's what I want to get across. I really don't know, my friend. That's the truth. And I don't need to know. That's the more important thing of it. All right. Next up, Sergio. How often do I update HPMR, and do we have to replace it manually on our chart, or does it update automatically? So hourly price movement ranges are something that we're looking at two things all the time. And the DPMRs are going to get the same treatment. I look at beta, we look at symbols, and then we look at volatility. And when those things have moved enough, we do update them. It typically doesn't go more than about 21 days between updates, right? About 21 days, about the max. And then we're usually somewhere inside of that. Okay, as far as the actual tech of it, if you're using TradingView is a completely different platform than, say, Thinkorswim. It pushes through. So no, once you have the TradingView, And if you're active on it, because we know who has access to these. So if you're active and your username that we know we're going to push out to, TradingView push will automatically push out to your username as long as we have on our end that you're an active account. On Toss, that's where we let you all know via email. So you'll get an email from us saying, hey, go into the indicator section of the Simpler Trading website and download the new Think scripts and overwrite the old ones you've got or import them fresh, whatever the case may be. All right. So one way or the other, it depends on which platform you have. Those are the two platforms that we support. And that's that. All right. Question from the free trading room. How do we get the sector slow stow? Marka, I can tell you what the settings are. You can set this up with the slow stochastic that's built into Toss. The only major difference is, and I think I told you all, I should call this the cataracts. The Raghee has cataracts slow stochastic, and I do have cataracts in both eyes now. And therefore, all those lines crossing get very tricky for me to see. So LornaBot did do some coding for me and cleaned up the crossing. So I'm just looking at a single line. But really, at the end of the day, it is a slow stochastic 21K 3D 80/20. That's it. That's it. So you can set up something that will give you a similar read. But as far as this goes, this is in the Sector Secrets Mastery Room. I make this available to Sector Secrets Mastery members. And on the 15th, I'll let you all know this is going to be included with the next package for my class. So if you're wondering, okay, Rog, this DPMR thing, the Darvis, all this stuff, what is it part of? It's part of the top system. And slow stochastic is being added to it. So a couple ways you can go about doing it. All right. And in the meanwhile, go ahead and throw that slow stochastic from Toss up there. It just really works well. I've just got a couple of the things that we've coded in here to make it easy on these old eyes. All right, gang. Have a great one. As always, thank you for the questions. I'll see you tomorrow. Same time, same station. Be good to each other, gang.